Welcome to the Daily Rip Live. It is Thursday, August 28th. I'm Katy Perry here with Alex King, CEO of Cestrian Capital Research, and our good friend, familiar face, Evan Medeiros. Alex, welcome to the show. Is this the first time you've been on?
It is. I'm excited. Thank you for the invite.
All right. No pressure. You know, if
no
it goes
pressure.
poorly, you're not going to come back. So
I get that. That's fine. I get 15 minutes, right?
Yeah. We'll let you know. Evan has been back multiple times. Evan has met the gold standard of the show. Evan, how are you doing? How's your summer been? What's new?
I'm doing good. The secret, Alex, is you get Katie's Venmo and then you just double her some money and the invites will come back. So that's
situation normal for securities markets. I get it.
Yeah.
Wouldn't have to do that if Celsius would sponsor me. I've been tweeting at them for months. Celsius, if you're reading this, I'm having like 2 of your products a day. Probably not good, but just sponsor me, and then I don't have to, bribe the guests. Well, we have a lot to cover. I mean, I'm in New York. It's pretty slow here this week. I feel like everyone dipped for the long weekend, but there's a lot happening in the market. We had Nvidia earnings yesterday. We've got the Opendoor stuff going on. We're going to get into. We had Snowflake reporting and CrowdStrike. We're going to talk about Ethereum. So we got a lot going on in the show today. So stick around for the full hour. Before we jump in, let's do a quick 1-minute rundown of the business headlines before we dive in. Nvidia, as I mentioned, delivering a blockbuster quarter. Revenue surged 56% year over year to $46.7 billion, but shares dipped nearly 2% in the pre-market, down 3% after hours. Investors are cautious. There was a little concern around their data center business, weaker than expected sales there, and some ongoing uncertainty about China exposure. We're going to dive deep into that one. But Snowflake stole the spotlight. I wish Shai were here. Shai loves Snowflake. That's one of his big dogs, as he says. They beat earnings expectations and raised fiscal 2026 outlook, sending shares soaring about 13% in pre-market trading. And then CrowdStrike, another Shai Balor favorite. This is the cybersecurity firm, of course. We talk a lot about the breadth of their product, all of their modules, as Shai says. They posted an earnings beat on EPS and recurring revenue, but the outlook disappointed investors a bit. So shares fell about 3% following guidance that came in slightly below expectations. And in other business news, futures today are mixed ahead of the opening of the markets. And we got the long weekend coming up. This isn't a stretch of the year that's known for a lot of volume. But we do have, ongoing geopolitical developments, central bank scrutiny, global trade dynamics, the normal stuff we've been talking about all summer. But let's break it all down, and let's start with Nvidia. Alex, I know I just saw you're very what's the word I'm looking for? You write a lot on your blog. What's that word when you write often? I don't remember.
Vomit on the page.
No.
It's prolific.
Prolific.
There you go. Prolific.
Thank you. You are prolific. And I saw you that happened yesterday. You already had a full post. Where can people read that full post first? And then tell us your quick take on what you saw.
Yeah. The full post, no paywall, at cestriancapitalresearch.com. And you'll see it right there. Quick take. I think, the company is still the big dog. And if you step back and you look at the fundamentals, if you look at the longer run chart, if you look at the way that the AI economy is setting up, there's going to be some bumps in the road, but it's still a monopolistic supplier of GPU into the highest end data centers going, and that won't last forever, right? In tech, monopolies always fail in the end. I'm old, as is obvious, and this is not my first rodeo, and empires like Nvidia's always come to an end. They come to an end because they're making too much money and they've got too much market share. So one day, somebody will chip away at Nvidia's market share. Any competitor will look at their 50+% cash flow margins, their huge gross margins, dominant pricing power, and also the chip architecture that leads to the huge power requirements that those data centers run. And somebody will erode that. Probably ARM and Broadcom will be in the mix. But that's not today, right? That's at some point in the future. And it's not next week or next month either. For now, you've got incredible levels of growth for the size of business. You've got a business churning out hundreds of billions of dollars of revenue, that's growing that revenue at 60, 70% with 50% cash flow margins and more net cash than any country on earth. That's a beast. And if you look at the longer run stock chart, I don't think it's done yet. I don't think the market's done yet. I think we've got more bullishness to come. And I think Nvidia, sure, it can sell off today. We can get a little Q3 correction for sure. The chart on the screen here, thank you guys, is our sort of, bull and bear tick, if you like. So the green box is support. And it's support because obviously if it falls down there, it's green for a buying area. And that's nothing other than standard technical analysis. It's a 38.2 retrace of what might be the wave 3 high so far. And then if we get that drop down to 150, which I know will cause people to lose their minds, but it's not much of a drop really, then I think it can run up from there to 220 plus. And it's quite possible that the thing just keeps going up from here anyway. If you look at the short-term moving averages, red line on there, that's the 8-day simple moving average, it's above that. Green, 21 exponential moving average above that. Blue, 50, purple, 200. It's above all those moving averages. So until it starts to trip those on the downside, this thing's going to move up. Today's close, critical. So you can't tell much about what big money thinks of these things in post or pre-market. So today's close, that's the one to watch.
All right. A couple of quick follow-ups for you. I'm interested in your take in sort of the monopolistic trajectory of the company. And I'm curious, you think there's a lot of room to run. This won't happen anytime soon. What does a company like Nvidia do to fend off someone like ARM for as long as they need to?
Yeah, you do exactly what Nvidia's done. So, since year dot, they recruited software developers. So they gave away famously the CUDA software development platform, and you get people in early in their careers, and you get them completely welded into your coding environment, your belief system. You get people into the religion. And they've done that. And all good chip companies, in particular software companies, do this. Cadence, Synopsys, the EDA software companies, they've done this brilliantly for 30 plus years. So you do that, and you have everybody being a member of the religion. And so if that developer or designer moves shop, then what do they do when they get to their next company? They go, well, I'm trained on CUDA, so we're going to use that here. And they've done that, and they've built a brilliant ecosystem. They have a showbiz, box office CEO that helps. And who doesn't want to be part of the Nvidia world? And all of those things are the sort of non-technical, non-financial things that you do to build and then defend that sort of market share. And they've done it, brilliantly, obviously. But all those monopolies end. They always do. And they end because customers hate it. I know every hyperscaler you ask, they'll go, oh, we love Jensen, we love Nvidia, yada, yada. But they don't, because they're paying such huge prices and huge margins. And I think that the two things that will, not crash Nvidia, but the things that will cause it to tip into an inevitable decline at some point are, one, pricing, customers hate it, and two, power. Right? So in the end, there isn't enough power in the world to run data centers that run on Nvidia GPUs. There just isn't. And that starts with the chip design itself. It's fundamentally power hungry in a way that other approaches aren't. So, ARM can't walk in tomorrow and take all their market share for all the reasons we've discussed. They can't. But can they work with other vendors? Broadcom, I think, notably, they're doing a lot in application-specific chips. Can they work with other vendors to, over time, build up a competing consortium? And I think they can and will. And I think their friends there are, one, people building the data centers because it's cheaper, and two, the cities and the states that are absolutely stymied right now because they cannot provision enough power to fuel the expansion of this sector. So that's over a number of years. But ARM, I think, is a pretty interesting stock. With a long-term perspective. Anything can happen tomorrow, next week. There could be a market crash. Who knows? But on a long 10, 20-year time frame, I think that's the one to watch.
Yeah, it's interesting. You talk about the stickiness of the product, and it is, it's an advantage to a point, and then customers start to resent you. And in my world, think of things like Salesforce, DocuSign.
Yeah,
like you have to use it, and you don't want to.
Right.
So yeah, that's
exactly.
an interesting call out. Evan, did you follow earnings yesterday? Are you seeing or hearing anything interesting? What sort of piqued your interest after Nvidia earnings?
Yeah. So the way I sort of simplify this and look at it from an investor, if I put my investor hat on, thinking about Nvidia and the report yesterday, I don't think anything really fundamentally changed, right? Like, I think you saw a lot of reaffirmations of the growth story, right? A lot of the things, the stickiness, the 50% plus compounding, revenue. Yeah, we've got some slight data center, hiccups, but I think if you came into the event as an investor with a 2+ year outlook, I don't think anything changes, right? So I think you're staying the course. I think where things get maybe a little more interesting is if you are a shorter term trader. If you're trying to game out the next 1 to 3 months, then maybe there's some maneuvering here. Alex brought up a good kind of 150 level for Nvidia, and just as a student of price action here, I mean, Nvidia is up over 100% from the April lows. If it corrected down to 150, that's a 20% pullback. I mean, that is very garden variety. It's almost what you'd expect. It's almost what you'd want, right? You'd want that. You'd want the stock to breathe out, reset the floor a little bit, get the strong hands in there, and then create that base for the next move up. So I would love a 150 Nvidia. Do we get it? I don't know. But yeah, we are in a seasonally weak period. I think traders, can have some fun here. We're going to get the price action. Weekly close is going to be important, but that's kind of my 2 cents. I don't have any skin. Well, my skin in the game is I have a large position in the Qs, right? And we all have skin in the game, because if we're passive investors in 401ks and S&Ps and the NASDAQ 100, I think it's a 10% weighting. So, I guess I do care about what Nvidia does, but that's just kind of my read now, and I'll be paying attention to the weekly close.
Yeah, and Alex, in your writing, you mentioned particular winners yesterday, the big money. You explain a little bit about that. If people who came in last, after that mark that Evan mentioned, had a big drawdown yesterday. Who had a great day yesterday?
Option sellers had a great day yesterday. Well, we'll see where it closes today, but option sellers, right? I have a huge advantage in investing, which is options scare the living daylights out of me. So I tend to not use them very much. I dabble, but not really. And in particular around earnings. Anyone who can successfully buy options around earnings, I take my hat off to them. That's too hard for me. And very often these market events, which are, there is a sort of psychodrama around, like, everyone's waiting for the Nvidia print. Why? Well, it's obviously the most important company. You've got all of the trade policy issues that may or may not affect the business. We don't know. It comes at a seasonal weak point, on average in the market. So everything's set up for a big drama, right? So you're going to have a whole lot of drama type traders buying dramatic option positions. And if you're Citadel or any other market maker, that's every religious festival rolled into one, right? You've got huge emotion that you're just going to sell into, and your goal will be just collect all that premium and keep the good free money, which I think is likely to have happened. I think the expected move, I don't follow it closely, but it was something like plus or minus 6%. I don't think it's going to deliver anything like that. So great news if you're an option seller. So that's the big win, I think.
Yeah, and I mean, how sustainable is that option selling edge for those people like Ken Griffin? How does retail...
Gone pretty well so far. Gone pretty well so far.
But if you're a retail investor, like how should you be thinking about this when you're up against those guys?
Don't go up against them, right? So our whole that's easy. I mean, our whole everything we do in our research, everything is based on, look, you've got more tools than have ever existed in this world, most of which are free, to work out what big money is doing. So why don't you just follow a little bit behind them, right? Never in front of them. You'll get run over and crushed, but just follow a little bit behind them. The breadcrumb trails are there for all to see if you learn how to look. And so whether that's in equities or ETFs, and then in options, learn to sell options. If you really want to deal in options, if we run an option service, it's nothing at all like anybody else's. It's run by a guy who, Jay O'Bain, he came to trading from statistics, right? So his view is this is just a statistics game. I don't care about Wall Street or anything else. This is just a video game called options. And most of what he does is teach people how to sell them in a risk-controlled way, which is what market makers do. So my own view is you can't beat big money. How could you? Your edge is work out what they're doing and follow around a little bit behind, never in front.
Evan, what do you think about that? Because we had a funny conversation last time you were on, talking about how you don't catch feelings when you're all about the data. Shai was saying, Alex, my co-host, he's a thematic long-term. He gets very emotional. Like he went on this whole rant. The CEO wronged him.
Right.
It's so funny. He was like, I feel like I was betrayed. And
Right.
Evan's like,
Okay.
it was good. And then Evan's like, I couldn't care less what these companies say. He's like, I'm just looking.
So, I'm in that camp, I've got to say.
Okay, yeah. So Evan, do you ever look at where the big money is going and factor that in, or not so much?
Yeah, I think so. I think Alex and I probably come from similar backgrounds here. So very much data-driven, analytical, quantitative as much as possible. In regards to options, so I do work with a lot of new traders. I will say selling options is becoming increasingly popular. It seems like there's more and more products coming out. There's more and more covered call ETFs coming out. Do I think you can go up against the big money? No. And generally, I would say I am very scared, I guess similar to Alex, to buy options. Like long options, you have to have so many other elements correct, right? You have to not only be the directionally correct, but your timing now is incredibly important. And so is the implied volatility of this stock, right? So you have this multi-variable equation that just opens up, and most people certainly don't understand what goes into that, or the newbies don't. They just see the big percentage gains and losses. I do think, though, so I do say for newer investors, again, I don't think you're going up against big money at this point, but if you own shares on something and you sell covered calls against it, I'm not saying you're going to, blow down the doors and be the, biggest returns, but that is a way to hold the asset while generating yield is a tough term. You have to be okay with, giving up your shares at the higher price. But I mean, that is a way to go into earnings, right? If you're a nervous Nvidia investor or nervous Snowflake investor, that's how you can mitigate some risk. You can take some of that anxiety, that 6% implied move out of Nvidia, and then turn that into a little bit of cash flow, lower your cost basis, and just try and be a little more intelligent and sleep easier at night with it. The same is true on like cash secured puts. There's another, and I won't go too much down the rabbit hole, but if you're going to buy 100 shares of Nvidia, and let's say you're listening to the Daily Rip right now and you're saying, well, I could go out and buy 100 shares of Nvidia, or Alex likes that $150 level as a potential support level. Maybe I'll go sell a put. I have the cash. I'll sell the 150 put that expires in September. I'll generate $200 or $300 or $400, and I'll see if I can get a lucky hit of owning Nvidia at 150. So there's some creative ways to do it responsibly, none of which really involve buying options, because that just becomes harder, in my 2 cents.
Yeah, I couldn't agree more. Yeah, couldn't agree more.
It is fascinating. So I'm actually working on a book right now that's about like how companies should engage with retail investors. So 2 weeks ago, I fielded this survey of 500 investors, and a quarter of them said they traded options, which seemed about right. I think it depends where the pockets come from. This was a random sample, but it was more than real estate. It was more than art and collectibles. It was less than the typical stocks, ETFs, bonds, but definitely something people are interested in. But as you guys called out, it could be scary stuff.
People are attracted, naturally enough by, if you're good at it, you can make, unimaginable sums of money. Of course you can. But it's so difficult. Most people, myself included, have a hard enough time calling the y-axis correctly on a 2-axis chart, right? Mm-hmm. That's hard enough. So you're then asking people to plot success in 6 different dimensions. Mm-hmm. I mean, that's why computers are good at it and humans aren't. So good luck with that if you think you could, you're that good. Some people are, but most aren't.
Yep. Sounds like a good use case for AI.
Let's
move to Evan. I know you want to talk about Snowflake. Snowflake's having a good day so far. What are you seeing over here with this one? following, I believe it was yesterday's earnings with those guys after closing bell.
Yeah. So for Snowflake, I'm going to share my screen here real quick. This is a long-term view of Snowflake, and I'll throw it to even a monthly chart. So, I mean, the stock really hasn't performed too well as, since it went IPO in 2020, IPO'd around 250, and it's basically kind of been in the doghouse here, just trying to find its footing. And I was initially very excited about this stock, and I think I was a shareholder at some point in the 2021, 2022 timeline, but I kind of just got worn out for kind of obvious reasons looking at this chart of the fact that it just hasn't been able to perform. But now it's getting interesting to me again because, again, just kind of a zoomed out basic technical analysis take here. I mean, we do have 3 years plus going sideways, kind of a potential accumulation range here in Snowflake. And, kind of lo and behold, here we go. Snowflake's starting to get its highest weekly close in the past few years here, if it can start clearing above 220 or so. And it seems like earnings and some of the tailwinds of data is starting to come together for the company. So I like this as a kind of that potential stage 1 breakout here for Snowflake that could have a long-term uptrend that is emerging. It's not a strategy I follow too closely, but I do pay attention to 13F filings. There's a lot of smart early seed, kind of investors that have Snowflake on the books that have been investing and kind of backing this company. Some different smart minds that I like, kind of put some value in terms of directionally being correct. So for all of those reasons, I think the story is getting interesting here in Snowflake. I don't currently own it, but I am kind of paying close attention now.
All right. Alex, do you have any thoughts on that one?
I think Evan makes a great point about the accumulation zone. So there's a really simple method that I learned actually from Jake Wojastik, who you had on here this week. You often have on. And Jake's a funny guy, makes a lot of noise, but underneath it, he's a really very skilled analyst. And a very simple measure you can use is this volume by price analysis. Let me see if I can get this on the screen right now. 1 second.
Katie rocking the long sleeves today. Must be getting a little chilly down there.
It was 59 when I left my house. I almost got a pumpkin spice latte. Didn't.
'Tis the season.
Held back. But on to Alex's off of pumpkin spice onto Alex King.
Okay. Do you see this chart now?
Yes.
Okay. So this, as I say, I learned this from Jake, so credit to him. So if you look at, if you set a volume by price indicator, you can do this in TradingView, you can do it in TrendSpider, set it at a reasonable, sensible point in time. So this is at the late 2021 high right here. So time equals 0, late 21, Q4 21. And these volume by price indicators will tell you, the volume of all of the shares traded in a particular price band. And not always, but often, you can spot these accumulation zones over time. And so you can say with some reasonable confidence that between about 190 on the top end here and about 120 on the bottom end here, you can say with reasonable confidence that you have institutional accumulation there. Not definitely, it could be selling, it could be just rapid turnover of stock, but often. And you can see sometimes the attempted breakouts into what in Wyckoff rotation you'll see called markup, right? Which is where if you spent a couple of years building a big position in the stock in this high volume zone, at some point, good news stories will break about the stock, a nice earnings print, some narrative about why the stock's product has suddenly become critical to something or other, and the stock will start to break out. Whereupon, momentum buyers, be they momentum hedge funds or retail, will jump in and bid your stock up for free. Hence, it's called the markup zone. And not always, but often, you'll also see after a sort of pretty steep rise, volumes start to spike up at the highs as well, which is when all the folks who are buying down here start to sell up here, which is a great time to sell. So this thing I said earlier about following big money, we do this all the time, which is, a sort of a lookout below level, so a danger zone or a stop zone, an accumulation zone, markup, and then in the end, assuming this thing gets up here, a distribution zone. where it's likely that large accounts are selling. So why not sell there too? And so we use this as a, don't fall in love with the stock, play it through the cycle, understand where large accounts are taking their time to build up a position, understand where large accounts are sat back waiting for momentum buyers to bid the thing up, and then understand where large accounts are selling. Just do that. And yeah, of course, no method is perfect, and this isn't, but it's not bad. And I would agree with Evan. I think there's every chance that Snowflake can break out now. You've got a whole story about why it should succeed in the world of AI. It's not, headcount driven, it's data driven, all of that. I think there's every chance that it breaks out. Yeah, I don't own it myself, and I don't plan to, but I think it's got a good shot to break it.
Shout out to Jake. Jake was on the show earlier this week, and his dog made an appearance, Mocha. It was a great moment in this show.
Nice.
His dog is large. A question on this method, the volume by price analysis, for people, we have traders listening to the show. We also have long-term people. Is this is more useful for a short-term trade, or could a long-term investor look to these as signals for relative strength into the future overall?
Well, we use it for months to years time cycle. So if you go back and look at our receipts, we use the exact method in late 22 to say, great time to buy Nvidia, Meta platforms, and a whole bunch of others that then delivered, multiple 100% returns. And I'd like to claim some sort of genius, but it's not. It's just going, look, you've got rock solid support down here. Volume is picking up. Is it likely that big accounts are selling Nvidia down here, or is it likely they're buying? You don't know, but it's likely that they're buying, right? And so the method, you can apply it over very short time frames, but we use it for months and years, and we also use it to call, okay, this thing looks like it's topping out now, time to sell and get out. It works even on not so liquid stocks. Iridium, the satellite comm business, it trades perfectly to the system. It's again, no method's perfect, but it's pretty good. And if you basically overlay this volume by price, think about Wyckoff rotation, this accumulate, markup, distribute, markdown, and then you put any technical analysis platform over it. Now, we use Elliott waves and Fibonacci's, but any technical method will work. And you bring that set of tools together, it's pretty good.
All right. I want to shift gears a little bit to Opendoor. Opendoor, we had Eric Jackson on last week. What a funny guy. Enjoyed him thoroughly. Eric is obviously the self-proclaimed captain of the Open Army. He is stalking Drake's house in Toronto, but that's all sort of the shtick to get buzz going. He also has a lot of, he has his PhD in management. He has a lot of thoughts about how the company's run. Alex, I know you had an extended conversation with him, and at the beginning you were saying, I'm gonna give him the benefit of the doubt. So I'm curious what you heard from him, and if you had any doubts after, based on any of his ideas, or are you joining this religion, as you like to put it? Well, should I say cult?
Yeah. So I own some Opendoor shares, and I've traded in and out of it once already. I bought in when it was around $1. I bought some stock and I bought some leaps, even though I don't do options, as I mentioned earlier. And I banked some gains on that, and I bought back in again when it dropped. And I have a life-changing position, but enough that it would make me happy if it went up. What do I think? Well, the thing I like most about Eric is he's completely self-aware, right? So most times you speak to someone leading a charge like this, and they think they're every religious leader rolled into one, with a messiah complex to boot. And Eric's view is, I'm good at some things, I'm really bad at other things, but I have been quite good in my career at finding broken down stocks of businesses that are not well run, and I've done all right investing in them. And the thing I really liked about the call with him, which is, if anyone wants to watch it, by the way, it's if you go to our StockTwits profile, it's the video is pinned to our profile. There we go.
There's the opening bell.
That's the thing I liked about him is he's very self-effacing and will say, I could have made a lot more money than I did from Carvana. I've got this wrong and that wrong. And that always, to me, builds my confidence in an investor, because most folks who talk up their stock, they've never made a bad trade in their life, right? Mm-hmm. And, most people over social media, they're investing geniuses, but we all know this. And when a guy goes, this is what I'm good at, this is what I'm not good at, I listen. And what fascinates me about Opendoor is, and a complete and utter silence of the board. So you have, some quite grown-up funds as shareholders in that business. You have an increasing, din from retail investors on social media. And it's not an organic din. It's led like all dins. But that's a lot of pressure on a board. And the board so far has just gone, I'm going to sort of, pretend this isn't happening. And I'm not sure that's a sustainable approach. And I also think we're going to see more and more open doors. If you think about what the internet is doing to trading and investing, it's destroying every guild, every sort of, gentleman's practice, if you like, that ever existed across the world. And investing and trading is one of them. And activism, that we're all familiar with, right? The Elliott Advisors, Value Act, that sort of method. That's a long-standing, very successful way to get value out of a stock where currently there is none. But activist investing is changing. You can see it changing. This is an example. You can see in some of the noise around company marketing. Cracker Barrel most recently, Bud Light, Jaguar. All of these names. The internet is changing how companies have to engage. I mean, you're talking about your book, Katie, on this, which would be fascinated to see what you conclude with this about how companies should engage with retail investors. So the Open Door saga, and it is a saga, absolutely fascinates me. I think, for what it's worth, that something will break to the upside. I think there'll be plenty of volatility along the way. I don't know about 82 or 300 or 500, but do I think 8 or 10? Sure, I think 8 or 10. Because I think the board's going to have to yield and do something. They already parted company with the CEO. That is a huge scalp. And I have no opinion on whether the former CEO was good or not. I've never met him, I don't know. But I would say that as a method of activism, that's pretty impressive. So let's see what comes next. But yeah, I think that I think it's got legs. That's what I think.
It is fascinating. So when Eric was on, I was like, have they ever returned your calls or emails? He's like, no. He said some of them DM him on X. And it's like,
yeah,
what? This is like,
exactly.
Compliance. I'm like, what? How's this?
No, exactly. Right.
Yeah.
New world.
And to his credit, the acting CEO, Srisha, who I think was the CTO prior, might be wrong on that. Eric's sending out ideas, and Srisha's like, we'll look into it. But the fascinating thing, to your point, Alex, about the internet is I've seen even this week as this kicks up, you now have former employees weighing in and saying, hey, we messed up this tax thing in 2020. It's like, whoa, it's all coming out only because.
Yeah, and like you say, compliance, SEC, I mean, this is a new world, right? This is a new world. But once you open, once this genie comes out of the bottle in any industry, it doesn't go back in, right? The internet ruins, and deflates, and spoils everything it touches, everything, and has done for 25 years. I was here when it first happened. I've been here through internet 1, 2, 3, and I'm here now. And it is the most fabulous thing. But you just want to be, again, sat behind the wave, always ride the wave, never be in front of the wave, right? Because it always wins. There is too much power, too much force. You can't resist it. And so, I think that Open Door will play out positively. Again, I would say 82, but certainly up from here. And I think that the board here looks out of date, really out of date, right? I think they need to engage, and they need how this company handles this, for better or worse, will define, the next one of these campaigns. And, anyone who's on a public company board that's on the end of this, they should engage. What's the win for them in just going, I tell you, we're going to pretend this isn't happening, we're going to do some stuff behind the scenes, even if their ideas are correct, and they might be, I don't know, it's not a good look. And in a world where optics matter so much, they need to find a different model. I'd be fascinated with your book, Katie, because I mean, you're going to deal with a lot of these topics.
I want to talk to you about it, but we'll table that. But yeah, the board thing's fascinating too, because it's probably a little bit of paralysis. Some IR agencies probably getting paid a boatload of money because this is a high stakes game. If there's something that someone says something on CNBC or tweet and it's tone deaf, it's going to be way worse. And so sometimes they're probably being like, you know what, being quiet is better than messing up royally. But it can't continue, to your point, that there's too much pressure mounting.
Well, the funny thing is they already did the big thing, right? The big thing, the watershed moment, was the CEO went. So the big scary thing already happened. So it puzzles me then to see the board then go, right, now we're going to go quiet. It's like, well, you already seeded the point, right? So why would you not now engage? Because the optics for you, if you engage, are much better, and the outcomes are probably better for you as well. So it's odd. It is the essence of new world versus old world, and I can't think of an industry where the old world held out for long.
Yeah, it's a good point, Evan. I know this wasn't on your hit list for today, but do you have any thoughts on Opendoor from Opendoor? I'm gonna get just absolutely crushed by the Open Army. That was a slip up I did not intend. You're not boring. Opendoor. Evan.
That's a Freudian slip right there.
Oh God. Oh my God. My mentions. Evan, any thoughts on what you're seeing? Even, I mean, general thoughts on the movement, but even in the charts itself, is this one you're tracking?
The only thought is I'm just incrementally getting FOMO from just totally missing out on this story. I mean, I saw it early because it showed up on a lot of kind of technical breakout scans that we sort of pay attention to. So saw the story, it just wasn't interesting enough. I didn't really understand kind of what was happening, and it is fascinating to me as I'm getting more and more involved into what's unfolding, but I don't have any skin in the game. I don't have too much else to add to it. I'm just a spectator, and some kind of missed this one.
What is great about these things, you see Eric Jackson soliciting Drake outside of his house, but even myself, like, I knew Opendoor, I would just put them in a bucket with Zillow, Redfin,
right?
And even I'm like, okay, what is this? And I'm like, oh, they have the iBuyer business. They do this differently. It's these moments where things are in the headlines. Maybe it doesn't mean you jump in and invest, but you learn a little something about either the category or the company. And so I think that's a silver lining of this all. But as Alex says, the internet takes no prisoners. Let's flip over to Ether for a second. So Alex, I saw on StockTwits you wrote that you are long the Ether complex, or at least your team did. So, they're fresh off of hitting an all-time high. You got Tom Lee saying could be 10K, 15K by end of year. You got all the stable coin momentum. What's your high-level take on Ether? I'm sure you have more extensive writing about it you could reference too, but what are you looking at here?
Yeah. So I haven't previously been much of a crypto investor or trader because I scare easily. And the volatility of most of these things scares me. And I will be publicly hauled out on StockTwits for saying this, but the lack of utility in most all of these coins so far, Bitcoin included, sort of puts me off a bit. Right. So I figure I'm not that good of a gambler. I'm not a bad investor. I'm not a bad trader, but I'm not a very good gambler. So I've sort of stayed clear because I couldn't easily learn the rules of the game. Right. So I approach personally each security as its own game. It has its own rules, players, patterns, all that. And you have to learn each ticker if you want to be successful. I never could really get to grips with any of these things. I'd read about Ether in, I'm going to say 2018. There's a great book by George Gilder called Life After Google. And he meets with Vitalik and talks a lot about this. And so I sort of piqued my interest, bought a little bit of it in 2020 or 21, got burned, left it alone. And then started reading about the Genius Act, the fact that stable coins would be on the Ethereum blockchain, and that stable coins would, in essence, be the US dollar. And then I started to get really interested because, systematic, big money investing, well, that's what we're good at. And so I started to look into this and think, okay, so the tokenization of assets, that's going to happen. Why is it going to happen? Because if you're a big asset manager or an asset owner, this is just a wonderful world of money you're about to step into. This is just liquidity heaven. And so it is going to happen. So we're going to see artworks, stocks, buildings, anything we can think of, digital creations, anything we can think of is going to be tokenized. And that's going to happen on the Ethereum blockchain. Why? Well, certain features of blockchain, but mostly because everyone's decided that it's going to happen on that. And as everybody knows, you have to own Ether to do transaction processing on that blockchain. In the old days, you paid AT&T to run transaction processing on, some bespoke software, but now you buy Ether to run transaction processing on the Ethereum blockchain. That makes it interesting. The supply isn't as controlled as Bitcoin, so I think you have some pricing risk to the downside there. But I see a big race arms race basically to accumulate this currency, which is somewhat supply controlled. And also, if you look at the Ether chart, and if you go right back to March 2020, here's the strange thing: it trades perfectly to institutional patterns. It's volatile, obviously, but it trades perfectly within our world of Elliott waves and Fibonacci levels, or anybody else's technical analysis system that works. It trades perfectly to them. What does that tell you? It tells you that it's going to behave like an institutional stock, just a very volatile one. And that is a game where, I personally, and we as a firm, we know how to play that. So that's what got me interested. And the whole, treasury company thing is pretty interesting. The question is, can any of them sustain a premium to NAV? And how do you do that? That's not an easy thing to do. And there's nothing special about a treasury company. It's the same as an investment company or an investment trust in the old world. Same thing, which is you buy stuff and your shares are valued at a premium or a discount to stuff. Usually a discount, because people worry that the stuff you say you don't have quite as much of it as you say, or they worry about the fees you're charging, or liquidity or something else. Usually a discount. Where there's a premium, that's a really rare thing, and we're seeing that in the treasury company sector right now. So Bitminer Motion, usually at a premium, and the others usually at a discount, and that reflects, I think, the Tom Lee factor. Mm-hmm. So I'm bullish on Ether. I hold it through ETFs. Again, as I've said many times today, I scare easily, so I don't like native crypto personally. I know I will lose my wallet. I know I'll be that guy searching through the municipal dump in the hope of finding my billions. And so I use ETFs, and I own some of the treasury companies as well. So I'm bullish.
It's interesting to hear. I mean, you've said a few times you don't like gambling, options, but somebody who you're looking again at the pattern institutions follow to a T, and you could say, well, that's kind of like the other things, but a little different. And it's a good way to think about it. And so based on your previous point about kind of tracking, following where the big money's going, that's part of this, that you're seeing the inflows from the institutions, and you're saying, okay, that's okay.
Yeah. I mean, put simply, if Peter Thiel is buying into this in size, why wouldn't you want to follow him around? I mean, nobody's perfect. He'll make some bad decisions. Of course he will. But in general, if you followed him into each and every one of his major plays, you've done, let me see, quite well. And so he's in Bitminer Motion, he's in Ethzilla, and it's clearly a sector that he's decided is important. Tom Lee is a great showman, but a bit like Jake Wojcicki, don't let the showman aspect make you think that he doesn't have the chops underneath it, because he does. So you get two super smart people really putting personality behind this thing. That's going to drive adoption that's going to drive buying, I should say, by itself. So for me, that's a game I'm happy to play. I don't have any, we started running a crypto service a few months ago. And so I've spent a lot of time in crypto Twitter, which is a very special place, I can tell you. I don't have religion on any of these things. I don't have religion on any stock. I don't care what Zika is or what the thing does. So there's all these wars about this coin, that coin, this blockchain. I don't care. This is something that big money has adopted, is going to adopt. It'll have a trend for as long as it has, and then something else will happen. But for now, this is a number go up game. I'm confident.
The point's well taken on the Tom Lees, Peter Thiels, because those are people whose entire livelihood and success is based on their credibility. And so when someone like that puts convict, you're like, okay, they're sticking their neck out. Evan,
why would you short that, right?
Yeah, exactly. Evan, what's your opinion on Ether, on all of this? Do you agree with what Alex has to say here?
Yeah, so I've got lots of thoughts. So
Share
Ether
used
to be, and you're gonna start to get a little bit of maybe the the shy attachment excuse me, out of
Shy attachment syndrome.
yes,
Yeah.
yes. I think it's contagious because it just started showing up, in these last couple of months. Anyway, so Ether. I'm going to sort of take the other side here, or I'm going to paint a cloudier picture that I'm just less certain about ETH. And this is someone, and it sort of pains me because ETH used to be my largest position. I was trading it and fascinated by it basically when it launched back in 2017, 2018. The problem was I was in trader mode. So I was buying it for $22 and then selling it for 26 a week later and thinking I'm a genius and, kind of trading back and forth. But I was bought on and full on the mission that Ether would sort of swallow up the digital economy. I still think there is a chance of that. I still think there is a road to that. I do agree that anything that can be tokenized will be tokenized. So I do think that is a bullish sort of trend for the space. What is tough about ETH for me is the long-term economics, the tokenomics of Ether. It is unclear to me that because things get tokenized, value accrual has to go to the underlying blockchain. And the reason I say this is because layer twos of Ether have become incredibly cheap, right? They are almost free, right? And just in terms of the amount of transactions, and then they settle all at once. So they can transact thousands of times, then they come back to the mother blockchain and they sort of settle up in one, cheap 20 Gwei gas transaction. And so there's an interesting just tokenomics issue here that it hasn't fully solidified in my head, that just because things are getting tokenized, and yes, I do agree that Ethereum has sort of won that. They're in the front of that game of just high value tokenization. And I say that again as someone that holds NFTs. Like I was going around to conferences. I was in New York to the NFT conference, and I was big into generative art, and I still have some of those things. And so I understand the linchpin that Ethereum has, but it's a competitive space with lots of other blockchains. And I think the one thing that has to kind of keep you up at night on this thesis is Circle, for instance. Recently, IPO'd, big hit, tons of stable coins, Genius Act, all makes sense. That trend's going higher. They just announced that they're going to now start to develop their own blockchain. And so now you're going to have this just more fragmentation of block space, and it's tricky to me. So while I agree with all the trends, I don't necessarily fully, I can't get behind the tokenomics of it. Now, all that said, as a trader, because I am a trader first and foremost, ETH's at all-time highs, or just about at all-time highs. I would not short this. I would not, go against it. I would be on the buy side. I would be trading this as momentum. So I will talk the other side here and say, hey, look, I'll buy this thing because Tom Lee and his great head of hair is out there stacking as much Ether as
it is good.
The hair has it. Yeah, it is good.
Voluminous.
Right. So I'm not going to fight that train. Right. And I think Alex is right. I think Wall Street is here, and these big banks are interested. They're institutionalized and they're deploying capital here. I just personally would have an exit door plan, right? Risk management, as it always comes down to, is risk management.
I think that's smart, and I think the end game is unclear to me. I mean, I think I think we're in the very early stages of tokenization, and if you think about, forget the technology platform, think about why is it happening? It's happening because it's a less regulated environment than standard securities. Right? Simple as that, and therefore it's a higher profit environment for asset owners and for asset management. So it's going to happen, right? And it will dilute the existing regulatory environment. So the question for me is, if tokenization is, if that's the thing, if that's the theme, or if that's the organizing axis, if you like, then whenever any industry standardizes on something, you always get a ton of growth opportunities that come around that. So if you think back to networking, okay, now, every network you look at runs on TCP/IP, but it didn't used to. It runs on, IP over Ethernet, but it didn't used to. And networking really took off within the LAN, within the WAN, within the home, when the standard was sort of chosen, and then everything got cheap, very cheap, and other applications grew up off of it. And the reason we're all having these incredible technology-based conversations today is because it's all so cheap. And I think something along those lines will happen with tokenization, which is standards will be picked. Perhaps it ends up being the Ethereum blockchain or database, or maybe it doesn't, I don't know. But the standardization is what will drive opportunity. And so for me, I'm truly fascinated, because I don't have any hobbies and I like this stuff, as to where this goes. And this is sort of tokenization Act 1, right? So you've got a bull run in the thing you need to pay gas fees, and we'll see where that goes. But to me, getting in amongst this is the way to learn what's the next opportunity, the next opportunity, the next opportunity. Because look at the treasury companies. That has to be a short-term thing. You can't sustain a premium to NAV forever. You can't. There's nothing new about a treasury company. If you buy coal and you stack it up, then in the end, your stock is worth a bit less than the coal you own, right? So that's a momentum play, and something will come after it. But I think tokenization and standardization is going to lead to lots of things, and it's very, very early in that trend.
Do you think, a question for both of you, I'll start with you, Alex, because you're just on the point, but the standardization, is there room for 2-3 standardized players, or is there, what would be, for someone who's not as deep in this, what is like the next closest to standardization? Is it a Solana? Like what does it look like behind Ether?
Yeah, I mean, the story you hear, and it might prove to be true, I don't know, is different blockchains for different purposes. And you can imagine this could be true, right? So in the world of data, if you think about a blockchain as a database, really, it's just a fancy word for a database. And again, I'll get hauled over the coals for that, but it is. So in database land, you use heavyweight databases for some things, and you use lightweight databases for other things, depending on the application. So probably that's going to be true with blockchains as well. And you see the argument that goes, look, Solana is cheaper, faster, all of that. So for less mission critical, less important transactions, why wouldn't Solana be favored? In the same way that, if you go into a large old line bank, they'll still be using some version of, IBM DB2 or some even older database. But if you go into a newer company, they'll be running some sort of NoSQL database because it's cheap, light, runs on the internet, easy. So I think there are multiple opportunities. I think it's too early to say how it plays out. And so me personally, how I allocate this is by, capital weighting. So, I have a position in Bitcoin via IBIT, because again, I don't like native crypto. I have a position in Ether via ETHA, ETHE, some of the treasury companies. And I have a position in Solana via SOLZ and SK something else. I can't remember what the other one is. And I have more in Ether than I do in Bitcoin, and I have much smaller amounts in Solana, because why not keep a few balls in the air? So I think you're absolutely right, Katie. I think that is what will happen. Who does what when? Too soon to tell. But I think you're right. You will see a plurality of stuff, and I think that the enterprise software database world isn't a bad analogy for how it plays out.
And Evan, you mentioned following this one since 2017, which is that's way before people even knew about normal people off of crypto Twitter even knew about Bitcoin. So you kind of spot these things early. Is there anything you're looking at outside of Ether right now, or how are you sort of playing this one, if at all?
Yeah, I've spent a lot less time recently just trafficking in this space, but yeah, for a long while my life was just jumping from Discord to Discord or just whatever and trying to figure out what the hell was going on in this space. Yeah, so I mean, like a lot of people, I do put Bitcoin in its own silo, right? Like I think Bitcoin exists over here, and then I think there's kind of like everything else. And so like Alex said, the smart way to approach this is kind of market cap weighting the top 10 crypto. I think there's some ETFs that do this too. And so basically you can just stay in line and just say, you know what, I'll let the market fight this out. I'll see where value accrues and I'll be positioned accordingly. So I think that's like a very reasonable approach. I prefer Solana over ETH. I think there's just more asymmetric upside there. I did have some until I've been selling some on this latest run. So I don't think I have any more Solana left. Pretty much just holding on to Bitcoin. There's a lot though. I mean, to answer your question, I think, and like Alex said, there's special purpose blockchains for certain things. I know SUI, SUI is a very popular one that is been gaining traction now for some time. It's more of a high performant chain that I think is mostly for like game developers with lots of throughput and transaction settlement. So that one I know is gaining steam. And, you know, like you would analyze a public equity, lots of these the opportunity on the upside go up the smaller the market cap, right? I mean, you know, you could say that when you're buying some of these tokens, I know they're more developed now, but you're almost like stepping in as an angel or a VC investor into a technology startup. I think that's the appropriate sort of analogy here. And so if you're going to, you know, buy Solana over ETH, I think you are probably taking on more risk. If you're going to buy SUI over Solana, well, you are going out on this risk spectrum even more. And you could go down that list to more esoteric tokens too. So it's a game of whack-a-mole. I think the fascinating thing is we'll see what sticks and we'll see where value accrues. I think everything can have its place, but I think, you know, getting the you know, unique selling proposition in all of these tokens will be very important for them in the near future.
Yeah, great.
Yeah. That's Alex. You were going to say something? Or you just
No,
agreeing?
I agree. I
Okay.
agree.
Well, the psychology of what you just laid out, Evan, is interesting. If you think about altcoins or earlier state as like VC, the VC is putting bets here, but that counters sort of the tribalism of some of these, where it's like, I am this coin, like these. So
Yeah.
it's interesting.
That's an induced. That's not organic tribalism. That's induced,
How
right?
so?
So, well, if you fall for that, you know, I mean, seriously, I've got a bridge to sell you. I mean, you know, step back, right? Why would you get religious about this stuff? It's just money.
Yeah.
You know, it's just money. I mean, who cares what flavor the money is? You know, it's just a question of, you know, does number go up? Is it liquid enough? Can you manage your risk? Why would you get, if you're a developer, I understand that, you know, you have to, then you pick a tribe. I get that.
Yeah.
But as an investor, a trader, why would you get emotional about this stuff? Who cares? It's just a video game.
Yeah. I mean, we could have a whole other, it's a lot of sociology of like decline of communities and people turning to crypto, MLMs, like whatever it is. They just, that's a whole other show for a whole other something.
Yeah.
But I mean, you know, but you know, lesson one, right, in being successful consistently in financial markets is, you know, don't get recruited into a tribe, right? Just stand back and, you know,
your own thing.
Keep it rational, right?
Yeah.
See, the tough part is you're coming from the investor TradFi space, and a lot of these folks are like coming from developers or video games. They're not introduced to financial markets, so when they get a friend to kind of pull them into a community, they're like, "Oh wow, this is so cool! Like, look at my friend. I'm gonna buy."
I get that.
They've never managed risk or like, you know what I mean. So that's that's the tough part.
I get that. But we started some crypto coverage recently, and we figured we had two audiences, right? One, you know, old people who look at crypto and they're terrified of it.
Yeah.
And they're going to miss out, right? They're going to go, this is not a thing. And I'm going to pretend it doesn't exist. It's the whole Opendoor board thing. Right? It's not a thing. I'm going to ignore it. And they're going to miss out. Right? And then crypto people who are intimately familiar with the technology, but don't know about financial markets. And they're going to get steamrolled, right? And so we figured, look, those are our two audiences. And so we try to write in a way that appeals to both. So you're sort of trying to teach crypto people about how big money works, because by the way, you just got owned by big money. You don't know it yet, but you did, right? That's happened. That ship has sailed. And trying to teach, you know, crypto skeptics, let's say, about how crypto works. And that's worked pretty well so far. But it's because big money has just gone, all right, but you know, it's done what big money always does, which it goes, here's a big new thing. It's a bit scary, a bit threatening to us. We'll own that. Thank you.
Yeah.
Right. And so big money rules now apply.
Let us explain it to you on our blog.
Yeah, that's right. Exactly. Yeah.
I mean, someone should write that article. I mean, both of you. This would be a good. This was so fun. I could have gone another hour with you guys, so we'll have to run this back. So appreciate both of your time this morning. Evan, always good to see you. Alex, I think you passed the test. I think we'll
fantastic.
let you. I have
That's
to talk
great.
to the producers.
It's just the accent, though, right? It's just the, I can say
Yeah,
anything.
you
Right?
know.
It's just the accent.
We gotta have a little like class coming in sometimes. But really appreciate you guys. This was great. Everyone watching at home, follow these guys, read their stuff. Smart gents. And
thank you so much for the invitation, Katie. It's much
Yes,
appreciated. You do great work on that show. So delighted to be on. Thank you.
Thank you. And
Always good to
Evan,
hang. Yep.
yes,
Thanks,
happy
Katie.
Labor Day to you. And we'll see everyone on Tuesday after the long weekend. I hope everyone rests up. Maybe read some of these guys' blog posts and tweets, and we'll see you next week.